Well, take us through trade as it played out at the NSE yesterday, and are you targeting that 4,000 mark right now?
Thank you, Alishia. Right now, I see the NSE index being pretty much range bound, and this is for two reasons. The first reason being that this is still an earnings announcement season, so we are seeing a lot of jitteriness in the market in anticipation of what companies might announce or not announce. And the second reason is because of the recent power rationing program, which will bring in which will increase the level of uncertainty in the market, and therefore we expect the investors to be more cautious in their approach to investing.
That when it comes to local investors, certainly a foreign investor appetite hasn't abated. I mean, there was a point last week where 62% of turnover recorded had been attributed to foreigners specifically. So let's look at what's igniting interest from their side, because it's to a large extent what's driving demand, what's driving activity, and then prices higher as well.
I think the prices at the Nairobi Stock Exchange are looking pretty attractive at the moment, and I think that investors are trying to capture in on the gains that the locals are trying to direct more of their money to the bond market. So I think they're just trying to speculate in the short term.
So why this more cautious approach from institutional investors? You highlighted earlier that there's this very uncertain and shaky ground that the economy is standing on right now. Are they, on the other hand, looking at valuations any differently?
I think in the first place, they're still holding shares at very high prices of 2008 and in the past. I think that is one of the major reasons why they are not yet in the market. And the second reason, we are seeing that the government borrowing has really stepped up. So a lot of their money is being channeled towards this direction.
Well, we know that when we left things off on Friday, it was Standard Chartered still standing in the spotlight and triggering quite a bit of excitement in the banking sector after its release of its results, and then the divvy payout that it announced also proving to be a nice incentive. Let's look at the fundamentals here. Are you convinced in Standard Chartered's ability to sustain the level of profits it's reported, and that's managed to get everybody so excited?
In my view, I think their results are a bit one-off because they've taken a very much conservative approach to lending in the past 2 or so years. So I think their risk appetite for this year might have been higher than that of the average bank. But I think going forward, if the economic environment does not improve, the same factors that are affecting other banks are likely to catch up with them as well.
Let's look at equity. We know that many have been saying that this is the banking stock to buy ahead of the GDP rebound in the country. We're anticipating results out of equity sometime soon. What are your expectations there?
What I expect to see this time round is that more focus will be placed on the level of non-performing loans as opposed to growth in profitability, because right now what we expect is for the banks that have been taking increased risk in the past, we expect them to take a more defensive approach, and which is likely to hurt profitability. But I think investors will really be looking at the sustainability of earnings in terms of non-performing loans and provisions for loans.